Morning, students. Yesterday I gave 3 homework from Statement of Affairs. So I expect everyone to complete the homework. If you have any doubt, you contact through phone number. Thank you. Today we are going to discuss illustration number 9. See page number 13. Page number 13. Ahmed does not keep the proper books of accounts. Find out the profit or loss made by him for the year ending 31st March 2018. Bank balance on 1st April 2017, 14,000 within bracket credit. Credit means bank overdraft. That is credit balance. On 31st March 2018, 18,000 bank balance. That is a debit balance. That is, it should be considered as an asset. It should be considered as a liability. Cash in hand 800, opening, closing 1,500, stock opening 12,000 and closing 16,000, debtor opening 34,000 and closing 30,000, plant opening 80,000, furniture 40,000, creditor opening 60,000 and closing 72,000. Ahmed had withdrawn rupees 40,000 for his personal use. It should be considered as a drawings. He had introduced rupees 16,000 as capital for expansion of his business. It should be considered as an additional capital introduced by the proprietor during the accounting period. A provision of 5% on debtors is to be made. So, a portion of debtor may or may not be recoverable. It should be considered as a provision for bad and doubtful debts. Time being, at the time of preparing statement of affairs at closing, it should be considered as a loss. So, this provision must be deducted from the debtors on closing balance, not in opening balance. Plant is to be depreciated at 10%. Now 10% also calculated closing statement of affairs, not in opening statement of affairs. So with the help of these items, now we are going to prepare statement of affairs as on 1st April 2014 and statement of affairs as on 31st March 2018. So these adjustments are to be appear in the closing statement of affairs, not in opening statement of affairs. Now come to the problem answers. Now statement of affairs as on 1st April 2017. Okay, then liability side. What are the items appear in the liability side? Bank overdraft 14,000, creditor 60,000, asset side cash 800, stock 12,000, debtor 34,000, plant 80,000, furniture 40,000. So first we put the total. First we check which side is the highest amount. Asset side is the highest amount. First we put the total on asset side. The same total also appear on the opposite side on same line. The difference to be treated as a capital, that is balancing figure. 92,800 to be considered as a opening capital. 92,800 to be considered as a opening capital. Then statement of affairs as on 31st March 2018, that is closing statement of affairs. This statement of affairs is prepared to know about the closing capital of the business. Then creditor 72,000. Bank favorable balance, it should be considered as an asset. Cash 1,500. Stock 60,000. 16,000. Debtor 30,000 less provision on debtors 5%. 30,000 on 5%, 1,500. Remaining 28,500 to be shown on the outer column. Plant 80,000. Depreciation 10%. 10% on 80,000, 8,000. Remaining 72,000 to be shown on the outer column. Furniture 40,000. So next we are going to find out the total. Which side is the highest amount? Asset side is the highest total. First we put the total on asset side. The same total also to be appear on the opposite side. That is liability side. The difference to be treated as a total to be considered as capital at the end. That is closing capital 1,04,000. So opening statement of affairs adjustments are not appear. See, opening statement of affairs adjustments are not appear, but in closing statement of affairs two adjustments are appear. One is a provision, another one depreciation. So note these 2 points. Adjustments are to be appear in closing statement of affairs, not in opening statement of affairs. So with the help of these two statement, now we are going to prepare the statement of profit or loss. Closing capital 1,04,000. Drawing say 40,000. Now we get 1,44,000 less additional capital 16,000. Then adjusted closing capital 1,28,000 less opening capital 92,800, profit 35,200. This is the method for calculation of profit or loss under single entry system. Are you clear? Next. Then preparation of final accounts. Preparation of final accounts from incomplete record. How to prepare final account with the incomplete records? When books of accounts are incomplete. When books of accounts are incomplete information recording revenue, expenses, liabilities and assets are not fully recorded. It is an incomplete one. Hence, it is difficult to prepare trading account, profit and loss account and balance sheet. But with the available data, whatever given in the problem, with these information, now we calculate missing figures. With the help of these items, we are going to prepare final account. So, some of the items are missing. What are the items are missing? Expenses, revenue, assets and liabilities. Only two more items alone to be recorded in single entry. One is a cash account, another one personal account. Personal account means a debtor account and creditor. These accounts alone to be recorded. Other accounts like real account, nominal account, expenses, revenue, assets, liabilities are not recorded in the single entry system. So it is not possible to prepare the trading account, profit and loss account and balance sheet. But with the available information, now we are going to calculate some missing figures. Then what are the steps to be followed to prepare the final account from incomplete record? Following are the steps to be followed to prepare final account from incomplete record. First one, opening statement of affairs is to be prepared. First one, opening statement of affairs is to be prepared. So what purpose to prepare the opening statement of affairs? To ascertain the opening capital. To ascertain the opening capital. Then second step, missing figures must be found out with the available data. How to calculate, find out the missing figures with available data? Now we are going to prepare some more accounts. First one, it may become necessary to prepare cash book to find out the missing items such as cash purchase or cash sales, because all cash transactions are recorded in the cash book. But some of the items to be omitted to be recorded. Credit sales and credit purchase, revenue, expenses, liabilities, assets. Then second one, preparing total debtor account and total creditor account. For what purpose to prepare the total debtor account and total creditor account? First one, total debtor. Total debtor account is to be prepared to know about the credit sales during the accounting period. For what purpose to prepare the total debtor account? To know about credit sales during the accounting period. Then, for what purpose to prepare the total creditors account? To know about the credit purchase during the accounting period. To know about credit purchase during the accounting period. Now, total creditors account is prepared. First, already I said total debtor means one who buy the goods without giving money, but the debtor liable to pay in future. Creditor means one who supply goods for us without receiving money. We have to pay in future. That is a creditor. So these two accounts must be prepared. Otherwise, we do not know the total purchase and the total sales. With the help of total purchase and total sales, we are going to prepare the trading account. What is meant by trade? Trade means buying and selling of goods at a profit. Buying means purchase. Selling means sales. Now, if you want to prepare the trading account, total purchase and total sales is essential for preparing trading account. Then, bills receivable account and bills payable account. For what purpose to prepare the bills receivable account and bills payable account? To know about how much amount received, how much amount receivable from debtors. Okay, then what purpose to prepare the bills payable account? How much amount paid to creditor or how much amount payable to creditor. These reason to prepare the total debtor and total creditors account. So, under single entry system, these are the steps to be used to find out the total sales, total purchase, then bills receivable, bills payable. These accounts are needed for preparing single entry system to know about the trading profit and loss account and the balance sheet. This method is known as a conversion method. Now single entry are converted into double entry after making some process. After making some process means total debtor account, total creditor account, bills receivable account, bills payable account. These are the steps needed to prepare final account from incomplete records. The final step is to prepare the trading profit and loss account and balance sheet. Then the format. This is the format of total debtors account. Debtors. Opening balance. Debtors opening balance. Generally, debtor is to be considered as an asset. Asset always shows debit balance. The opening balance to be appear on the debit side. Sales account, that is credit sales. Goods sold to debtor. What is the journal entry? Debtor account, debtor to sales. For example, goods sold to X on credit, X account debtor to sales. X to be considered as a debtor. So it should be appear on the debit side of the debtor account. Then check dishonor. Now we receive check from debtor. These check are deposited into bank, but bank refused to pay money for that particular check. Again the same check returned to debtors. So one who received the check, again debtor received the check from bank. So receiver account should be debit. That is debtor account should be debit. Bank is the giver. Giver account should be credited. So debtor account debtor to bank account. So debtor account debit side to bank. Then next one, cash received from debtors. Cash received from debtors. What is the journal entry for cash received from debtors? Cash account debtor to debtor account. So debtor account credit side by cash received. Then check received from debtors. check received and deposited into bank. So one who received the check from debtor, bank. So bank receiver should be debit, debtor giver it should be credit. Now bank account debtor to debtor account. So debtor account credit side by bank. Then discount allowed to debtor. It is a loss for us. Discount allowed is an expense. It should be debited. The value of debtor goes down. How much goes down? That amount should be transferred to credit. So discount allowed account debtor to debtor account. So debtor account credit side by discount allowed. Then goods returned by our customer. That means we received. Why should return the goods? Due to damage or destroy or inferior quality or not in proper packing condition. These are all some of the reasons goods returned by customer to us. Now we received goods returned by our customer. So goods again comes into the business. According to the real account rule, what comes in should be debited. Sales return comes in. So it should be debited. Debtor is the giver. So debtor account should be credited. Now sales return account debtor to debtor account. So debtor account credit side by sales return account. Next, bad debts. First, you know the meaning of bad debts. Debt which cannot be recovered are called bad debts. Debt which cannot be recovered. It is a confirmed irrecoverable item from debtors are called bad debts. It is a loss for the business. As per nominal account rule, all expenses and losses are debited. A bad debts is a loss. It should be debited. Now bad debts account debtor, the value of debtor goes down. It should be credited. Now bad debts account debtor to debtor account. So debtor account credit பண்றதுனால it should be appear on the credit side of total debtors account by bad debts. Then bills receivable received from debtors. Bills receivable received from debtors. What comes in should be debit. At the time of bills receivable comes into the business. Debtor is the giver. So bills receivable account debtor to debtor account. Debtor credit. So credit side of debtor account by bills receivable. Then bills receivable dishonor. Bills honored. Bills are honored. So bill drawn by the debtor, it should be honored. So at the time debtor account debtor to bills receivable account. Debtor account debtor to bills receivable account. So debtor account debit side to bills receivable. Then we find out the closing balance of debtors. This is the reason for preparing total debtor account. Why should prepare the debtor account? We know about the credit sales, or we know about the closing balance of debtor, or we know about the bill honored how much. These are the reasons to prepare the total debtor account. Okay, then come to the problem. Illustration. Page number 16. Page number 16. Illustration number 10. Find out the credit sales from the following information. Debtors on 1st January 2018. Cash received from debtor. Discount allowed. Sales returned. Debtors as on 31st December 2018. First one, debtor as on 1st January 2018, how much? 40,000. See, debtor always shows debit balance. It should be appear on the debit side to balance brought down. That is opening balance of debtor to be appear on the debit side 40,000. Second one, cash received from debtors. Now, what is the journal entry? Cash account debtor to debtor account. Now debtor account credit side by cash received 1 lakh. Then discount allowed. We allow discount to customer. It is a loss for us. As per nominal account rule, all expenses and losses are debit. So discount allowed is an expense. The value of debtor goes down. How much goes down? That amount should be transferred to credit. So discount allowed account debtor to debtor account. So by discount allowed. Sales return. Goods returned by customer to us. We received goods returned by customer. So goods again comes into the business. So sales return account debtor to debtor account. Sales return account debtor to debtor account. So it should be appear on the credit side of sales and debtor account by sales return. Then debtor as on 31st December 2018. That is a closing balance. By balance carried down 60,000. So then we are going to put the total. Which side is the highest amount? Credit side. First we put the total on credit side. The same total 1,67,000. The same total also appear on the debit side. Find out the difference 40,000 and 1,67,000. The difference 1,27,000 to be treated as a credit sales. So these total debtors are prepared to know about credit sales of the business concern. Then illustration number 11. So one small difference in between illustration number 10 and 11. First one, to find out the credit sales. Second thing, to find out the total sales. Okay. So debtor as on 1st April 50,000. Cash received from debtor during the year 1,50,000. Return inward. Return inward is always known as a sales return. 15,000. Bad debts 5,000. Debtor on 31st March 2019 70,000. Cash sales 1,40,000. With the available information, we are going to prepare the total debtor account. First, we write the opening balance of debtor 50,000. To balance brought down. Cash received from debtor during the year. What is the journal entry? Cash account debtor to debtor account. Debtor account should be credited. So debtor account credit side by cash received. Return inward. Return inward is always known as a sales return. We received goods returned by our customer. So goods again comes into the business. As per real account rule, what comes in should be debit. So sales return account debtor, giver account should be credited. Debtor account should be credited. So debtor account credit side by sales return or return inward. Then bad debts. Debt which cannot be recovered are called bad debts. It is a loss for the business. It is a nominal account. As per nominal account rule, all expenses and losses are debit. So bad debts account debtor, the value of debtor goes down, it should be credited. So by bad debts. Then debtor on 31st March 2019, closing balance. By balance carried down 70,000. Then we are going to put the total. First we check the total, which side is the highest amount, credit side is the highest amount. First we put the total 2,40,000, 2,40,000. The difference is how much? Opening balance 50,000, total 2,40,000. The difference to be treated as sales. That is credit sales during the accounting period 1,90,000. Now we prepare the total data to know about the credit sales. How much is the total sales? See, cash sales already given in the problem 1,40,000. Now we find the credit sales. Now we add the both. Which one? Total sales is equal to cash sales plus credit sales. Cash sales 1,40,000 plus credit sales 1,90,000. Total sales 3,30,000. So this is the reason to find out the total debtors account. Next, we are going to prepare bills receivable account. bills, the format of bills receivable account. Just you see the page number 17, bills receivable account format. Bills receivable always shows debit balance. It should be considered an asset. So opening balance to be appear in debit side to balance brought down. Then bills receivable from debtors. What is the journal entry? Bills receivable from debtors. Bills receivable account debtor to debtor account. So bills receivable account debit side to debtors. Then bills receivable honored, that is a bill drawn by debtor, it is accepted. So bills receivable account debtor to cash or to bank. Bank account debtor to bills receivable account. Honored by bank or cash. Which one is comes in? Cash comes in or bills receivable deposited into bank. So bank account debtor or cash account debtor to bills receivable account. So bills receivable account credited, it should be appear on the credit side of bills receivable account. Then bills receivable dishonor. Bills receivable dishonor. Bank refused to pay money for the bill. That bill is returned by bank to us. Now again we send the bill to debtor. What is the journal entry? One who received the bill, sundry debtor account debtor to bills receivable account. See, bank refused to pay money. That bill is sent to us. Now we are going to send the bill to the debtor. Sundry debtor account debtor to bills receivable account. Sundry debtor account debtor to bills receivable. Bills receivable account credited. So it should be appear on the credit side of bills receivable by sundry debtors account. Then closing balance of bills receivable at the end. Okay, this is the total. This is the format for bills receivable. Opening balance debit side, bills receivable during the year, debit side, bills receivable honored credit side, sundry debtor, that is a bills receivable dishonor, then closing balance. Then illustration number 12. From the following particulars, prepare bills receivable account and compute the bills received from the debtors. See, opening bills receivable 20,000, closing bills receivable 30,000. Cash received for bills receivable 60,000, bills receivable dishonor 5,000. These are the information. With this information, now we are going to find out bill received during the year. Bill received during the year. Then opening bills receivable. Bills receivable always shows a debit balance because it should be treated as an asset. So it should be appear on the debit side of the bills receivable account to balance brought down. Then cash received for bills receivable. What is the journal entry? Cash account debtor to bills receivable. Or check received for bills receivable. Bank account debtor to bills receivable. It should be appear on the credit side of bills receivable account. Then bills receivable dishonor. So these bill are again returned to debtors. So one who received the bill, debtor. So debtor account debtor to bills receivable account. So bills receivable account credit side by debtors account. Then closing bills receivable 30,000 credit balance by balance carried on. Then we put the total, which is that is the highest amount, credit side 95,000, 95,000. The difference amount 75,000 to be treated as bill received from debtors. So to debtors, these balance are transferred to total debtor account. Otherwise we do not know about a credit sales. First we prepare the bills receivable account, then we are going to prepare the total debtor account. See, from the following particulars, calculate total sales. Debtor as on 1st April 2017, 1,50,000. Bills receivable on 1st April 2017, 40,000. Cash received from debtors, 3,90,000. Cash received for bills receivable, 90,000. Bills receivable dishonor, 10,000. Sales return, 40,000. Bills receivable closing, 30,000. Sundry debtor closing, 1,30,000. Cash sales, 2 lakh. With this information, we are going to calculate total sales account. See, first we consider one point. Out of this information, first we are going to prepare the bills receivable account. We know about bills received during the year from debtors how much. With the help of these one, we are going to finish the total debtor account. So, first one, bills receivable account. Bills receivable opening, it should be appear on the debit side. How much? 40,000. To balance brought down, 40,000. Then bills received for bills receivable during the year. Cash received for bills receivable. What is the journal entry? Cash account debtor to bills receivable account. Bills receivable account credited, so it should be appear on the credit side of bills receivable account by cash. Then bills receivable dishonor. These bills are returned to debtor because bank refused to pay money for the bill. So again the same bill returned to debtor. One who received the bill from us, that is debtor. So debtor account debtor to bills receivable account. So it should be appear on the credit side of bills receivable account. Then closing bills receivable, 30,000. Now we are going to put the total 1,30,000 and 1,30,000. The difference amount to be treated as 90,000. That is bills received during the accounting period. Now these amount are transferred to total debtor account. Then we are going to prepare the total debtor account. First, debtor opening balance, 1,50,000. Debtor opening balance, 1,50,000. Bills, then cash received from debtors. Cash received from debtor. Now cash account debtor to debtor account, 3,90,000. Then sales return. We received goods returned by our customer. So sales return account debtor to debtor account. Debtor account credited. So it should be appear on the credit side by sales return. Then debtor closing by balance carry down, 1,30,000. Already I said one more item is transfer from bills receivable, like bills received from debtor during the year, 90,000. Bills received debtor during the year, 90,000. Now journal entry for bills receivable from debtors, bills receivable account debtor to debtor account. So debtor account credit side by bills receivable, 90,000. Okay. Then bills receivable dishonor. We received a bill returned to our debtor. So debtor account debit side to bills receivable. Then we are going to close the account. So credit side total is the highest amount, and first we put the total. The same total also appear on the debit side. The difference 4,90,000 to be treated as a credit sales, not cash sales, not total sales, credit sales. What is the journal entry? What is the question? Calculate total sales. Total sales means cash sales plus credit sales. Cash sales given in the problem, 2 lakh. So credit sales 4,90,000. So total sales is equal to cash sales plus credit sales 2 lakh plus 4 lakh 90 is equal to 6 lakh 90,000. So these are the part of the accounts we prepare before preparing trading profit and loss account. Okay students, now come to the end. Now the page number 33 in your book, problem number 9, 10, 11, 12, 13 are homework. Everyone are expected to complete the homework without fail. After reopening, we want to check the homework in all the subject. Don't forget, you should complete the homework within the stipulated period, otherwise not able to understand the problem. Okay, we will see later. Thank you.